let's get into it. So yeah, coming back on here with no glasses is probably the only time you guys are gonna see this in a long, long time. So I just got marking Monday through Friday up, and I want to go over. I want to go over everything. I love this though. This is like freaking beautiful, dude. Bro. Hold on here. Wait. Hold on. I apologize. Alright, I apologize, you guys. Let's get straight into this. So this is... Oh, dude, I went way back. Wait. Yeah, I went way back. So this is going to be going over... the 22nd through the 27th. So here we are coming into Monday. All right, fabulous. So I'm gonna be bouncing back and forth a little bit. Let me make sure I'm getting this right. All right. Beautiful. This is probably going to be the best weekly review of trading, most in-depth of this channel's history. So what we have right here is this is a new week opening gap. So going into today, this is Monday. I was expecting bearishness from open, high, low, close. So we have taken out previous days high, and we have closed right there. We opened, and our body is lower than the body of this one. So I am looking for bearish price action. All right. So here we are. We're going to jump straight into a 3-minute chart. Okay. Actually, I want to show a little bit on the 15-minute. So as you guys can see, this was a complete run on buy stops, and as soon as we close above and manipulate buyers, this right here engineers a lot of liquidity. This right here is what brings a lot of liquidity back into this market, like into this specific range. So as soon as we do that at 9:30 and we close back in at 9:33, let's go to the 1 minute to be exact. So yep, right at 9:30 we close above, 9:31 we close back below, close above again, and back below again. So this is indicating to me that we are wanting to go lower, and then we get hit with a 70-point candle, and this right here is a big market structure shift. This is how I use and indicate willingness to where I think that the market is going to go. So from here, we had a big run on stops, buy stops, close back. I'm bearish right after this market structure shift, and I am looking to engage a run on sell stops. So this, I would highly condone you guys to use this measuring tool. As soon as we do that, I'm looking for about 120 point expansion, and then after we displace, we have a huge fair value gap right here. All right, and I don't want to go too in depth on market structure shift. I kind of want to leave that for my private mentorship that is coming soon with a private Discord. So all of this right here is indicating that we want to go lower. So I'm just waiting for us to tap back into this gap, and then as soon as we do that, I'm waiting for the first bearish candle. And this very specific right here is where I'm always looking on the charts on the 1 minute, and I have to use the 1 minute and 2 minute, or the 1 minute and the 3 minute, or the 3 minute and the 5 minute, right? So I highly condone everyone to go 1 and 2 or 1 and 3 minute, to where you will not get very confused or misled from a lack of perspective, right? And so in this specific range, this right here is where I am bouncing around. I don't want to condone this for majority of traders. Like, I feel like I've gotten my 10,000 hours in. This right here is 4,000 or 4 years of my life work right here. So I get to go really low into like the 30-second, 15-second time frame in this range. So the first bearish candle that I see, think about it, right? We already have huge willingness to go lower. We already have a huge run on stops. Then we have run on stop, willingness to go lower, market structure shift, and we're retracing back into a fair value gap. And also what I like to do is I like to fib it up from the swing high to the low. And what is that? We enter right back into a premium market. What the marketplace, how the automatic price engine likes to do is it will literally go down and show you where it wants to go, and it will retrace back into a premium. So let's say that there was a $1 stake, right? Like a literal stake from the market, like from Kroger, Publix, Walmart. So let's say that the first day, right, this stake is going to be, let's just say $10. Days go by and days go by, and it comes back up. Okay, we have to get rid of this now because we've got new supply coming in. So we're going to register this as a $5 stake, but you can only get it right now. That's where I like to purchase, right there. So this is 50%. This would be equilibrium. Above equilibrium is premium, and below equilibrium would be discount. And so I'm only wanting to sell in a premium market. Okay, so as soon as we do that, we have a expansive move. So let's see, we have one more push up, and then we close down below, right? So this right here, what I'm wanting to do, how I trade prop firms, is this right here would be my first partial. So I would have gotten out as soon as we would have hit that first threshold for 80 points. And so I would have collapsed 1 out of 2 positions. So as soon as we do that, we come back inside. This next move, I'm just looking to respect SIBI's sell side imbalance, buy side inefficiency, And that right there is exactly what we get. And I think we come back up and we still respect it. We respect it. We respect it. We respect it. And then right there, our body closes outside of this fair value gap, which is what I do not want to see. So ultimately, this trade would be collapsed. I think I moved my. So this right here where I take a partial, I like to take a partial where I think it is okay to move my stop to break even. So let's see what happens from here. We end up collapsing down and going straight to sell side liquidity right there, which is perfect. And that would have been a 2.7 RR. Now I want to backtrack a little bit, and I want to show you guys exactly where I got out. So Monday, right? As you guys can see, my entry price was 9.42, which is perfectly displayed, and then my exit price is this right here would be my partial at 867. So let's take a look at that real quick. Let me draw this out real quick. I'm sorry. Okay, and then my exit price was at 883. So let's go right back. So you guys are probably saying, well, why did you get out here? And that is the emotional side of trading. There was no reason for me to get out at all, and that is one thing that I really struggle with for this week. So that was Monday's trade, and I would have been done for the day at 10:52. So now I kind of want to go into a 15-minute time frame, which would have been a perfect run on sell stops. And I want to go straight into the next day, which is going to be the 24th. Sorry, I probably should have went to an hour. So we're going to go right into 9 o'clock. So what am I seeing for the day right here? We have this would be kind of like, I would say minor buy side. We closed above the range and back, but we failed to displace lower. And so on the open, high, low, close perspective, we took out the previous day's low, and then we open right there, low, high, close. So I am expecting bullishness. It would be extremely bullishness if this body would have closed above this body, but since this is like 9 o'clock open, it's like you get what you get. That's all the data that I have at that specific moment. So what I'm looking at here is, okay, we have rated minor buy side, and we could potentially go for sell side, right? So I want to go straight into a 3-minute chart until market open at 9:30, and let's see what happens. Alright, I don't really know what happened there. My computer died. And it has been brought back to life. And apparently this video is still going. So I'm just going to take out the webcam and we can just go from there. So, right here at 9:30, we have a run on sell side, and I'm looking bullish. So as soon as we have that happen, we close back into the range, and then we are going lower. Dude, I really hope this video is still going because this is about to be so good. Alright, I'm thinking this video is still going. Hopefully I don't just record for an hour. So, anyways, this right here is major sell stops. We have a huge run on sell stops and we close back above the range. We have a huge gap right there. This sell side imbalance, buy side inefficiency gets disrespected. So that's why I fibbed this up, right? So it's crazy how we see all this, but it's about to unfold. So this gap right here gets disrespected. And this gap right here gets respected. So we had a complete just dump. And so we respect this short-term gap, come down for the bigger gap, which is also in a discount market, which is where you would want to look to buy. And then there is a huge fair value gap right there. And this is just at complete fair value. There is no, there is standing liquidity in this gap, which is what I'm looking at, or looking forward to use as support, if you will. So right there is where I am indicating buys. Okay, and you could have, I think it is permissible, like you would have permission to take that buy because we have extreme willingness to go up. We come down to the gap. We now are in a discount where we know big institutions are wanting to go higher, are buying in there. So let's see what happens from here. Right, so then we have I'm waiting on a bullish market structure shift. Perfect. So this right here, like I played this back and this is where I should have entered. Okay. And I got some cool stuff to show you guys about this. So huge market structure shift. Also we have huge willingness to go up, and we have a run on sell side stops, indicating all bullish tendencies. So right here we have a huge buy side draw. We know that buy stops are resting above there. We want to get to there. So this is where I should have placed my trade. And I just want to let this kind of unfold. So this right here is an order block. We have a market structure shift. We come back down into that order block, and I would purchase on the first or second good looking candle. So really just looking at price action. This right here would have been the sniper entry, in my opinion. So you could have gotten in right there at a 1.7 RR for 140 points. Or the better RR trade, like your stop would be below the order block and your take profit would be 2.89 RR. That is a very, very great trade. So what happens from here? This body closes above this fair value gap. So now that we are disrespecting sell side imbalances, which is indicating bullish signature bullish pressure. So let's just see what happens from there. And the trade ends up running beautifully. So if I would have taken 2 positions on this trade, I do not think that it would have been permissible to have a partial here, but I would have loved to move my stop loss to break even right around this general range, just because we have ran a big swing high. So from there, that would have been beautiful trade. All right. So now I want to go back to this right here. So as you guys can see, I don't know what I was thinking. I ended up selling at 871 and ended up getting out at 918. So that is what happened on my end, and that is I ended up taking a sell at 871.25, which this is why it's very important to be watching. I think it was right around there. Stop loss was probably above there and was targeting sell side. So that was the trade that I took, and it ended up blowing through the water. I don't really know what I was thinking there. Just bad read on the market, bad observation. So that is going to be Tuesday. And we also have extreme buy stops above here. And then we also have the new week opening gap for the second initial draw. So that would have been a 3.35 RR if I would have ended up holding for the new week opening gap. My position is floating in profit at this point, and that would have been for 193 points on a 3.35 RR. So basically, I was risking $100 to make $335. So that was a very fabulous Tuesday trade. So let's go ahead and go on to Wednesday. We're going to stop right around 9 o'clock. Let's go back one. So this is how it was looking on the daily chart for open, high, low, close. As you guys can see, we have ran buy side, and we have our body has closed below this swing high wick right here, indicating run on buy stops. That is just crazy, bro. Look at that. So I'm anticipating sells at the time being, and so that's how that candle would have looked at that time. So it is now 9:12. I want to go straight into the 1 minute chart to see exactly what happened. This day was very cool, in my opinion. I really like this day. So this is where you could have, it was a higher probability open trade, right? So open at 9:30, we exploded. And with given of all of this context, with your open, high, low, close, or actually, hold on, I want to go back over that. I'm sorry. So basically, how I'm looking at this is we took out this previous wick, and then we closed below this candle right here, absolutely shredded, and we almost closed above this body. That was indicating to me kind of bullish at the time, and that's why I feel like we exploded 353 points at the beginning. So that's where you could have had, there was a great open to get in from open high low close. So great open trade if you were able to get in that early expected big open high low close bull run. So we still have not purged this huge higher time frame bullish gap long term draw on liquidity, which this is just a 15 minute. I think it was on the hour, it was a little bit, yeah. This was the higher time frame bullish gap that I was anticipating as a draw on liquidity. So what we do from here, we burst open. This is Wednesday, okay. And so let's just see how it plays out to where I can demonstrate, or I can. All right, so I drew this fib from this low to this high to kind of get a range of things, and noticing that we have already ran through this draw. So after we run and we close above this gap, I'm no longer really paying attention to that. I'm just kind of looking from left to right. And so what do we do from here, right? So we have a huge swing low. We have already ran through our bullish draw on liquidity. So I'm just demanding more price action at this point. So right here we have a great market structure shift, which is saying basically that this right here is showing me willingness to go lower. I'm not using that as a trend line, I'm just using that as a demonstration tool. And so we have great willingness right here to go lower, right? Just a clear strong down move. I'm looking for a retracement to come back lower into this big liquidity void gap. And that's what I like to call it, because that's what it looks like. So in here there is a pocket of liquidity that has not been touched, and I'm assuming that we are going to run lower. So we come back up and we tap into the order block. I don't really want to go too deep into order blocks. That's going to be kind of like a private mentorship thing as well. And so I would have liked to sold on the on probably this candle or this candle. Either one of these is permissible in my opinion. It's literally just the first couple or the first or second bearish candle, right? So what we do from there, we expand pretty well, and this is to where I would have possibly liked to take a partial and move stop to break even around 1.8 RR, collapsing one position. So let's see what happens from here. All of this right here, okay, all of this from, I would say from 1057 until right around there, right around here is where we have a lack of willingness to proceed a lower price run near the liquidity void, which is down here. All right, so as soon as that happens, I would have still gotten a 1 to 8, possibly 1 to 8 RR trade for around 50 points, which is not terrible by any means. You're still scalping the NQ futures contract, and being able to float on a 1 minute chart, which is immaculate. Not a lot of people can do that. Not a lot of people on Wall Street can do that. Not a lot of people in the world can do that. So this is just a very high class skill in my opinion. So anyways, this is showing a lack of willingness to go lower, which is where your trade, your second position would have been collapsed. your second position would have been collapsed, and you would have still gotten out with a 1 to 8 RR. But right trade idea, just, you know, that's where your management will come into play to protect you, right? And so, to show you guys some proof, I did not take a trade on Wednesday, as you guys can see. I was just kind of, I don't know, I just didn't really like the trade, which is completely okay, because going into it, I did not like what I was seeing, and I was demanding a little bit more price action, and it failed to do that, right? So let's go a little bit further. So this is going to be the 26th. So we're just going to go right at 8 o'clock. And this is what the daily candle is looking like. So we have taken out this previous candle's wick. And so this candle for Thursday, we went open, high, low, close. And so we have, at this time, let me see if the 12-hour will, yeah, it looks like it's not working right now. Sometimes that happens. At the time, our body was somewhere, this candle's body was inside of this candle's body. So like, for the time being, our body was probably somewhere in here, which was indicating to me selling pressure, right? Also, we ran major buy stops, indicating that we are going to push down lower. Alright, so what do? We have a run on sell stops, or excuse me, we have a run on buy stops. And so I'm anticipating lower price. Okay, going into it, it is 8:57. So let's skip to about 9:30. So at this time, it is too late for me to chase anything, and it is too early to take a trade up here. Anywhere in here is just really too early for me, for how I trade and how I like to interpret the market, right? Which is perfectly fine. What we had here was just a complete dump at market open, and I ended up missing, actually, hold on, I don't even want to say that. So, from this high to this low, I drew a fib, and we didn't, so in this case scenario, we did not have a deeper pullback into premium above 50% equilibrium price. So yeah, to where we could go to down here, we failed to do so. So that was one reason, or that is one reason, on why to kind of hold off on entering. So yeah, that's kind of how I feel about this trade. This trade is, we didn't go back into premium, basically, is all that I'm saying. But we did react off of this order block, and we did have a huge run on buy stops, and we have already, so from midnight open to market open at 9:30, we were already negative 136 points. So the market was dumping, right? This is kind of like a trade to where it's kind of sketchy. It's kind of like you want to demand more price action, because sometimes what will happen is we will try to get a bunch of sellers in, and, or let's say it like this. Let's say that you did sell somewhere around here. Sometimes what will happen is price will move lower, price will move just a little bit lower, then come back and then proceed to go lower to take out all of these stop losses right here. So that's kind of what I was fearing. That's what I was fearing. That's something that I was very skeptical of. So let's see what happened, right? So this is somewhere where you could go break even at equilibrium, or hold on. That's something else I kind of want to hold off on for my private mentorship. So from here to here, which was this range, this was equilibrium. This right here is where you could have went break even, because this was a run on sell stops. That right there is where you could go for break even, and then your second intended target could have been down here for ultimate sell stops, right? So I did that on purpose with the trend line because I did not want, or just on that horizontal line, to kind of spoil anything. So let's see what ends up happening here. We run that out perfectly. So what did Drew do on his live account, right? Drew on his live account absolutely did not trust the trade. And so we entered at 243 and we sold at 214. So this is what I did. I sold at Bro, I'm sorry. I just got done working a 10-hour shift. My brain is kind of fried. So let's see what Drew did. I'm not understanding. So my entry price was at 243. And then I got out at 191. Yeah, man, this was another trade that I just completely kerblooted myself. I don't know what I did. This was my live trade, and I got in right at 9:45. So I got in somewhere on this bearish candle. I'm going to delete that for now to come back. This right here is what happened, you guys, and I can't explain this besides just fear getting the best of me. As you guys can see, this was a perfect trade. Break even right there on a 1-to-1, come down lower, 2.6 R for an astounding 250 points on the day. That is immaculate. And so that was Thursday. So now I'm going to take you guys over here on my other chart for Friday's analysis, right? Dude, this just, oh my gosh, this made me so mad. So going into the day, I kind of didn't know what to expect, right? I just did not know what to expect. We took out previous candles, previous buy side, and then we closed back into the range. So I was anticipating for this day possibly to expand somewhere down into here, but it did not look like we were wanting to take out This is what I was wanting, but it's a Friday. You know, you cannot. This is game right here. Okay, this is absolute game. This is like ball knowledge. Okay. Sometimes it's just like I don't know. It is. Sometimes you just on a Friday you cannot treat a Monday like Friday's volatility, and you cannot treat a Tuesday to have Thursday's volatility. You cannot treat just a Friday like it is any other day. I would love to get a 1 to 1.5 R on a Friday to close the day strong. So what Drew did right here was Drew ended up taking one buy in here. So this is your first presented gap. So I ended up taking a buy somewhere in here, and my stop loss got rated right here. Okay, and then there was another trade where we came back down into this gap, and I bought again. This is why candle closures are very, very. Hold on, let me Google a word so I can use this. I want to use the word prevalent. What does prevalent mean? Prevalent, widespread or commonly occurring, existing in many places or among many people at the same time. I don't know, whatever, right? So this was loss number 1, and this was loss number 2. And so when that happens, that's where I really have to reassess and say, okay, I am not taking another trade unless I am 1,000,000% sure. And so for me to show you guys some proof, dude, this ticked me off so bad, you guys. Entered at 852, got stopped out. Entered at 890, got stopped out again. And then we had a fabulous freaking trade right here. And so notice how this time it only says one position. Okay, I clicked the wrong button and I accidentally pressed sell instead of sell limit. Okay, so I would put a sell limit right here, and my stop would go to break even. This is where I would have gotten out of one contract. Okay, so what we did was we caught a 3.33 R trade, and we held for 165 points, which is fabulous. And that is this trade right here. So that was with one contract. So that should be plus $605 on the day. So that's why I ended off the week negative. Should have ended up plus $200 or $250 on the week. And that is a very rough week. And external discipline really got me. So external discipline outside the charts is very important. So I was supposed to go break even right there whenever we breached that swing high. Then we came back down and we respected a order block again. So one thing that I really did mess up on was I misinterpreted this completely. Okay, why is this order block not valid? Okay, why is this order block right here not valid? Because our body's closed outside of it. That is ball knowledge that I really should not be saying out here to the public. This is like very, very specific, intricate stuff. So we disrespected this order block right here. And that right there was what I was seeing for the day. and that was completely wrong on my end, and that's what I want to publicly say. So instead of the false order block, what actually happened, we just had a run on stops. So as soon as we close below and we close back above with speed, right? This right here is anticipated speed. This right here was if you guys want to look right here, this is the amount of points per candle is. So that right there is 45.75 point candle. That is not just out of anywhere. This was at 944. There's no reason for it to do that instead of run on sell stops, smart money concepts. So as soon as we close above, and I was also looking at the 30-second chart, I like to do that to split up each 1 minute chart. As soon as I saw this price action, I want to go back and look at the exact tick that I entered. Entry price was at 842. 842. And my stop was somewhere right around there to make it well, we can just call it a 2.5 RR, whatever. That's cool too. Dang, I thought I got in. I think I got in earlier on my live account. So 842 to 933. 842 to 993. Yeah. Alright, perfect. So, anyways, this was the fabulous trade right here at 993. And that was a 2.5 RR trade. So, one more thing that I want to get into. What we did right here in this specific order block, we had, so look, right, we have extreme willingness to go higher, then we come back down and we retrace, right? So what you can do to kind of gauge this is go from your low to your high, and look at that, ladies and gentlemen, we have dipped back down into a discount market, and then we proceed to push up for higher prices. So we are in a discount market. This should have been a pyramid entry, and a pyramid entry is, let's say that we were just floating along and we see another opportunity to add another position. This is a pyramid entry. And so I usually do not look at change in states of delivery as an entry model anymore, or an entry, a reason to entry. So what happened right here was we retraced back down into a discount market, also in an order block, and we have a huge rate on sell stops, huge willingness to go up, very big higher time frame market structure shift if you're looking at like the 3 to 5 minute possibly. So huge willingness to go up. And so what we did was we had to inject liquidity into the market, buy this sell stop. As soon as we do that, we come down to a discount price, like I've said, and anywhere in here could have been a valid entry. Any one of these bullish candles would have been permissible. It's hard because you could have gotten slipped out if your stop loss was just right here. Our bodies respected, so anywhere post 956 would have been a very, very, very good trade in my opinion. And I would just move it possibly under this wick, and that would have been maybe 2 positions, get out, break even after this, after we raid this swing high. You would have probably gotten stopped out, or you could have just added 1 contract to, which is 1 position for a 100-point move, on a Friday. So, with that being said, I hope this video did not freaking crash after my computer died. But that's gonna be it. That is the full weekly review. So, with that being said, I hope you guys good trading, and I will see you guys on Monday. And the whole goal for Monday, or not just for Monday, but for the week, to where I can show some statistics here. You guys, this was a $344 account, and I have gained it to over $1,000, which is crazy to say. I've hit my first $1,000 in trading, and that is with a 200 something payout. I did take out my first profitable week, which was like $200 and something, and then I made $500 on the live account, and then $500 again. And then we have this week where I did not have the best week. So you don't have to have a lot of money to make money in trading. This is off a $300 account, and I've already surpassed $1,100 with $344 of capital. So with that being said, man, that's going to be it. I hope you guys enjoyed. I really appreciate whoever is watching this video to the end. You're going to have my all, and